Good morning. Welcome to ET Now and this edition of the market. Let's get straight down to it and with the big question of oil prices. We thought, it would normalize, fall back below $120, then it's gone back up. Now China is going back into the lockdown mode, the world's largest oil consuming country. First up, what I would love to get from you, Mr. Madhav, is what is Oil India's outlook for oil prices? Are you expecting it to be at $120 a barrel? We've heard the RBI, for example, talk about an average of $105 a barrel for the year.
Yes, I think $60 to $70 looks unlikely in the current financial year, that is 22-23, next 10 to 12 months. Seems to be unlikely, but I feel that there will be some corrections certainly, because markets will have to cool down. 120 is certainly, this range is certainly unsustainable for a long time.
Right. Also, gas prices are determined by and, set by government for about 6 months. Given that prices have doubled already in the first half of the fiscal and are expected to increase by another 50% in the second half, the street is expecting that the government might put a cap perhaps on gas prices as they want to promote gas usage in the country, and higher prices would then be detrimental. Wanted to understand whether you see this as a possibility.
I cannot speak about what the government can do because that is the government's policy decision. I cannot speak about that at any point of time. Only thing is, currently what I can say as of now is there is a policy on the gas prices which benchmarks the domestic natural gas price to international certain hubs, 3-4 hubs of international gas markets. And as per that, there is an indication that the prices will further go up to some extent by effective 1st of October.
Sure. Mr. Madhav, we also understand that you are in expansion mode. Throw some more light on that. What's the timeline? How is it that you're going to fund the capex? And how much will be the incremental capacity?
There are two aspects to that. First, on a standalone basis, as far as Oil India is concerned, we are undertaking an expansion. Basically, it's an accelerated development program in certain selected fields of Oil India, wherein the crude oil and natural gas production we expect to increase significantly, maybe around 25-30% crude oil and about 50 to 60% natural gas over a period of next 3 years. By 24-25, that is the expectation. And then in our subsidiary company, that is the Numaligarh refinery, there's also an expansion plan underway, which is the refinery is expanding capacity from 3 million to 9 million ton. That is also expected to be on stream by 24-25, end of 24-25. The funding as far as the Oil India's exploration and development thing is concerned, it will be 100% from our internal resources. That's what we have been doing so far. But for the Numaligarh refinery, yes, there is a borrowing tied up, about 60-70% of the total refining investment of about 28,000 crore, which is expected in that expansion project. That will be funded through borrowings, and the rest from internal accruals or equity contribution by the promoters.
Mr. Madhav, now you spoke of the NRL refinery. It's also seeing benefits of higher Singapore GRM. So what kind of profits or dividends are you expecting from this unit? And what are the GRMs that NRL is getting at present?
The refinery in the last financial year, I think they made a GRM of $14 per barrel for the whole year, 21-22. And the GRMs, even currently, if we see the Singapore cracks, the GRMs are moving in the almost in the same range. So as per the current trend, refinery will continue to make good GRMs. Regarding the dividend part, as I told, the refinery is undertaking an expansion project. So we don't foresee a major dividend distribution by the refinery, but there are certain policy guidelines. There is certain minimum 30% of the profits is earmarked as the minimum dividend distribution. So as per that, whatever the profits the refinery earns, 30% of that will certainly be distributed as dividend. And after the expansion program, once it is completed, then maybe we can look for the higher dividend.
Right. Give us a sense, Mr. Madhav, as well as to what the production targets are when it comes to oil and gas for FY23 and even over the next 2 to 3 years.
For FY23 production target, I can say it is about 5% growth in the crude production from current level of 3 to around 3.15 to 3.2 million metric tons. And for natural gas, around 3.3 to 3.4 billion standard cubic meters. And as I mentioned in the beginning, by 24-25, we expect that these volumes will go up by 25-30% for crude and about 50-60% from the current level of natural gas. There is no thought of any divestment. We are not going to divest any stake in the Russian assets. And as far as the additional investments are concerned, in the assets that we hold as of now, no additional investment is required in these assets. So no question of additional investment as of now. Regarding the first part about distribution of dividend, yes, the first dividend after this current issue which is going on between Russia and Ukraine, the first dividend is due in possibly in July and August. So let's see what happens. Hopefully this will get distributed. The only issue will be temporarily setback about the remittance of fund outside Russia, which we will handle as things develop.
Right. Thank you so much for, highlighting all that's happening with the Russia business because, there was a bit of uncertainty whether you will get the next tranche of dividend or not. And I'm glad you, gave us that clarity also on the divestment of assets as well. But what I now want to ask is about the windfall tax. And do you think it is likely?
I would say that these are only rumors. There is nothing concrete going on as with respect to this windfall tax. It's only being talked about in the circles. And there is no concrete proposal which we are aware of.
Finally, your standalone debt has surged to approximately 12,000 crore rupees. Given that you're currently in capex mode, can we expect your debt to remain at elevated levels?
Our debt will come down by about 1,000 crore in the current financial year. We have a domestic borrowing of 1,000 crore, which we had taken for the Numaligarh refinery expansion, Numaligarh refinery additional equity acquisition. That most likely we will be liquidating during current year. So apart from that, there are no plans of any further debt raising at this point of time.